Talk to me about what you see in these markets right now. We've got earnings season kicking off, but we've got rates moving higher. Which is driving the equity bus right now?
Well, right now we have a news vacuum as far as equity earnings. We started to see the financials start to report, and you can see pretty clearly earnings are much more important than rates. When you look at the results, say, of Goldman Sachs today, the market reacted much more to that. And I think that'll continue to be the case, that it'll be an earnings-driven story. I think rates are too low, even with some very modest increases. That's not enough to slow down the economy and derail an outlook for pretty good corporate earnings, I think, in this year, 2022.
Well, let's talk about why yields are moving higher, Margie. There has been a dramatic repricing of expectations for the Federal Reserve. Now 4 hikes priced in this year. Why do you think they will actually only move 2?
Well, because I think there's certainly no compelling reason to move aggressively with 4 hikes. Because from the Fed's point of view, when they look out, they see an economy that's still strong but probably decelerating this year. They still see the risks of COVID, which may have negative effects that we don't know about. And it looks as if the early signs are that inflation is actually starting to come down from that 7% level. And at the same time, you look at real average wages for workers, those have moved up. So those are all very, very positive things that the Fed would like to see continue. And so I really don't think that they see any need to aggressively act and move for 4 hikes. I think 2 will be plenty. The market's kind of done their job already. They've really flattened out the curve. And so that will mean the Fed is I think, in a position to sit back and watch and do very little.
If we only get 2, how should I reposition for that?
Well, again, I think the most important thing is what companies, what sectors will continue to have above average earnings in 2022. And clearly, I think if you look at the way the market has wobbled around so far this year, and even at the end of last year, you can see that investor enthusiasm for the more speculative sectors, the more very, very highly priced sectors, a lot of that enthusiasm has deteriorated, not because of anything the Fed has done, but simply because people are a little bit nervous about what may be overvalued looking out into the new year. So I think earnings will be the story this year. Looking for those companies will really be the task. And we think the companies that have proven long-term growth will continue to do pretty well.